the financial statements or any exercise, you must always check the financial period. Can you see this 31st of August?
Yes.
So remember, they will always give you this from the requirements, but I didn't put the requirements, but from the requirements, they're going to ask you to compile accounting books on the 31st of August. So immediately, I think you know by now, you need to draw it.
Yes.
And then you need to put the end period, because the end period is given to you. So if they say, according to this one, they said 31st of August, 2022. So you must always know, when did you commence this period? When did you commence?
On the, okay. So we commenced on, I think it's the 31st of July, 2022. Or 2021.
Okay, let me give you a technique. No, let me, yeah, I get you. You said 31st of June. Okay, let me give you the technique. Ne?
Oh,
You must
30th
always
July.
look at the, come again?
Was it the 30th of July, 2021?
No, not the 30th. That's
Oh,
what I'm
okay.
saying. Let me give you a technique so that you cannot make a mistake in future. Ne? Always check the next, what is the next month after this? August is July.
Yes.
Okay, meaning you are correct with the month and you are correct with the year. You said 2021, but
Yes.
it must be the beginning of that month.
Okay.
Are you with me? It must be
Yes.
1st of July 2021. Will you remember this?
Yes.
Always check, doesn't matter which month do they give you, except December. Any other month except December. Just check the following month. It means you're going to start on that month on the 1st, the previous year. Will you remember that?
Okay. Yes.
Yes, that is the easiest thing. Because sometimes when you count with your fingers, you can make mistakes. Can you see now?
Okay.
Yes. So that's the first thing that you need to do. So the beginning here and the end.
Okay, got it.
No problem. Now, after doing that, obviously, is then that this is normally called the pre-adjustment trial balance. So they normally call it pre-adjustment. Let me call it pre-adjustment. I think you have seen it before.
Yes.
So it means the meaning of adjustment, it means some figures here can be increased and some of them can be decreased depending on this. So this information is the same as adjustment in future. If they ask you, don't be confused, the same thing.
Okay.
Yes. So meaning you must look at this adjustment and be able to analyze them. But in the exam, they can ask you to generalize them, or they can ask you to use them in the financial statements. So for now, because we're talking about the basics, I think let's talk about adjusting directly to the analysis here. Are you with me?
Yes.
Or maybe, I don't know if you want us to take it in order. Maybe if we start, I think if we maybe we can start with the general journal, because they can ask you the general journal.
Okay, yeah,
Or
from the
maybe
beginning.
you prefer us to maybe from the beginning. Okay, no problem. So the beginning is where the basics are. Okay, basics are.
Yeah.
So
Okay.
what I want us to do first, I'm just gonna say, what if they asked you, because this is where everything starts. Because I know examiners, they can surprise you. In most cases, they ask you for financial statements, and then all of a sudden they will come and ask you for what you call the general journal. I think you remember this. This is the GJ, ne?
Yes.
Yes, and then obviously this is debit.
Debit and credit.
Yes. Okay. Now, so we're just doing this for in case, because this is the basic that you need, because whatever you're gonna record here is gonna affect your balances there. So what I'm gonna do, I'm gonna show it here. At the same time, we're gonna talk about how are we going to adjust there. Are you with me?
Yes.
No problem. Now, firstly, let's look at the information here. They say physical stock taking, meaning we're doing stock taking at the end of the period. They say the following. So they need to see something on hand. You need to be careful. Why is that on hand? They said at the end, they say stationary on hand. So you need to understand what are the two accounts involved, like account equation.
Okay.
Are you with me?
Yes.
So now let me ask you something. Give me any account or two accounts. I need two accounts, but if you can't, give me one account that you can see that is obvious here. Give me the two accounts for number one.
I'm guessing it's trading inventory.
The other one is straightforward. No, there's no trading inventory. I understand the
But
reason why you
when
say
they
trading
say
inventory because you see
stock
stock take. Stock take is just a process.
okay.
Come again? Yes, there's no trade. Okay, the first account, let me give you the obvious account. The obvious account is going to be stationary. Let me write it down.
Okay.
Are you with me? And the
Yes.
other account will be stationary on hand, but that is called, I don't know if you have seen this before, we call it consumable stores on hand.
Okay, got it. Oh yes, I have seen that. So
Yes, so
consumable stores
the
on hand
following
is
are consumable stores on hand.
yes, okay.
Come again?
Consumable
The
stores on hand
consumables,
is
ne? Firstly, consumable. I think we're overlapping each other. Say something, let me give you an opportunity. Yes, you are saying?
consumable stores on hand are used for anything that's on hand, like that the company has on hand.
That's true. Firstly, you must understand what are the consumables. These are the office supplies. It's normally what we use in the office. Things like printing, things like stationery, things like packing material. Write them down. When
Okay,
they say
got it.
printing on hand, yes, those things.
It's
But as long as they are on hand,
okay.
yes. But remember the stock, the inventory can also be on hand, but it won't be part of the consumable stores. You understand what I mean?
Yes, okay.
Yes. So if they're asking you to generalize this, so the two accounts will be this. Can you see now? So it means we used we used stationery. So at the same time, the stationery was used. So when we used the stationery, it went down. So meaning at the moment, stationery must go down because now we've got something on hand. So the stationery will go down because we used it. And then obviously on hand, remember, it's good. Okay, let me just put it like this. So firstly, it's better for you to say, let me just put them here because I want you to understand, not to memorize. And then this will be your expense, ne?
Yes.
And this one will always be an asset. To be specific, current asset.
Okay.
So any consumable stores on hand is an asset. In other words, stationery on hand, the one that we have at the end is always an asset. But the one that we bought and the one that we used will always be an expense.
Okay.
Yes. So stationery has been used. Obviously, it went down. That's why I say stationery is going down. But my assets are going what?
Up.
Up. So when you go and generalize there, at least you know which one to debit and which one to credit. So I know you're still good with the base. Which one must I debit? Which one must I credit here?
You debit consumable stores on hand and you credit stationery.
That's true. Remember, you must have the word on hand because the minute you don't put on hand, it changes completely. It becomes an expense.
Okay.
Does that make sense? You must always
Yes.
have this thing on hand. Yes. So 3,000 there, and then I'm gonna have what? Stationery here.
Yeah.
And I put how much? 3,000. So they can
3,000.
ask you to generalize. I know my examiners, they always surprise my students.
Yeah.
Okay. So if they ask you for something called narration, you know, narration, remember a summary of what happened here, you can just say stationery on hand. That is what how you can summarize. We don't summarize the same way.
Okay.
Are you with me?
Yes.
Yes. So that's how you must deal with. So next time you're gonna have printing on hand, it's the same way. But you need to have consumable stores here. If you've got
Okay, got
packaging the same way, you're gonna have packaging, consumable stores on hand.
Okay.
Okay?
Yes.
Now, we said stationery is an expense. We said consumable is what?
An asset.
Is an asset. So we must know which statement are we going to transfer this to. Where do we record expenses?
I don't think I know that. I'm thinking in the Statement of financial position?
No, in the statement of profit and loss. I'm just going to write P&L. Okay?
Okay.
So I'm going to, sorry, let me just do this. P&L, meaning statement of, what's happening? I'm trying to say P&L, profit and loss. And a statement of profit and loss. In the statement of profit and loss, we record only incomes and expenses. You can write it down.
Okay.
Are you with me?
Yes.
And then assets will go to which statement?
Statement of financial position.
Perfect. So already you know by the time when you go to financial statements, you know where to affect to save time.
Okay, got it.
Yes. But remember, there are two accounts involved. At the same time, I just want us to show how will this adjustment, we call this adjustment, how will it affect there? Do you see stationery up there? Any stationery here?
No.
There's no stationery.
No, there's nothing.
Can you see now? There's nothing. But it means they gave us the profit before adjustments. Can you see this one is a bit challenging? So if we had stationery, I'm just gonna, because we're talking about what if.
Okay.
Didn't give you all the information, they gave you the profit that you need. So I'm just gonna say, what if we had stationery? Let's say the stationery was how much from the list of balances they gave you the stationery as 10,000.
Okay.
Are you with me?
Yes.
So here we said the stationery is going down, so we're supposed to go and minus how much before we record in the books?
3,000.
Minus 3,000. So the stationery to be included there would be how much?
7,000.
Are you with me? So in the statement of profit and loss, you will show 7,000 because you can see here the stationery went down.
Okay, got it.
Are you with me?
Yes.
So in a nutshell, if you see on hand, like stationery on hand, printing on hand, packaging material on hand, just know that when you go there, you are going to minus. Why do you minus? Because in the statement of profit and loss, you only need the one that you have used. This is the one that you have used. You used 7,000 because you had a balance of 10,000. At the end, you were left with 3,000. You used how much? 7,000.
7,000.
One that you used is the one that you must put in the profit and loss.
Okay, got it.
Because you got it.
Yes.
But for this question that we are doing, because they gave you the profit like this, because it was a past exam, so they didn't want you to waste time. They calculated profit for you. In other words, they calculated profit and loss for you, but before the adjustment. So here they give it to you as how much? 365,720. Ne?
Yes.
365. Let me do this. 365,720. So what you were supposed to decide, for example, remember this already includes whatever they minused and whatever they added. So the incomes have been added and the expenses have been deducted.
Okay.
So you were supposed to make this decision and say, meaning already they did include, for example, already they did minus how much? 10,000.
10,000.
Can you see now?
Yes.
Instead of minusing what?
7,000.
Instead of minusing?
7,000.
So what you were supposed to do, you were supposed to go and do how much? And do what? And add back 3,000. So this one was a bit challenging. Yes, this was a bit challenging because they are challenging you. So you must just check what did they do before so that you can reverse it. Because they were supposed to minus something before they recorded. So for this one, they were supposed to add stationery, for example, of 3,000. I'm just saying. But don't worry about that. Remember, for now, I'm just giving you the basics for that. So, well, I think if it doesn't make sense for now, don't stress about it. So I just want you to understand how were you supposed to. Can you see now? But what I want you to understand is this part for now. For now. And this part for now. Because 99% they will ask you like this, not like that.
Okay.
Not like this. For you to understand this part, you must understand here first. That's why here I'm assuming figures here.
Okay, got it.
Will you remember how to affect the stationery with this kind of information?
Yes.
Sure.
Yes, I'm sure.
I trust you. Let's look at the next one. Remember, for now, we're just analyzing the transaction, the adjustment. They say 6 months interest on the short-term loan has been paid in advance. There have been no changes to the balances or the interest rate during the current year. So they say 6 months interest. So what we need to do, we need to go and check that loan that they're talking about. They're talking about this loan. Can you see here?
Yes.
This loan here.
Okay, got it.
Are you with me?
Yes.
So it means we need to calculate the interest on this loan only for 6 months. How do you think we must approach this?
I'm not sure.
Okay, let's do this. So we're going to say, let me put it next to it. We're going to say, I'm just going to squeeze it here. The loan here is 80,000. You will say 80, ne?
Yes.
1, 2, 3. You multiply it by 14%, which is, can say 14 over 100 or 14% if you want. And you multiply it by what?
6 over 12.
6 over 12. Yes, because they said the interest that we're looking for is for 6 months. So we only want the interest for 6 months.
Okay.
Do you have a calculator with you?
Yes, it comes to 5,600.
How much?
5,600.
5,600. Can you see now? This is the advance that they're talking about. This is the advance. In other words, they paid 6 months in advance.
Okay.
So this is called the account that we use for it. We always call this, I think we have seen this before.
Yes, prepaid expenses.
Prepaid expense. So meaning if you are dealing with the journal here, so the two accounts will be prepaid expense and interests on loan, or we can say interest expense. So this will be the two accounts.
Okay.
Are you with me?
Yes.
And then remember, if something is an advance, it means, for example, this 5.6 is during this, is after this period. Do you agree with me? Remember, our period ends here, ne? It means it has been paid for the next period.
So it's an asset.
It's an asset.
Yeah, okay.
When we deal with the interest, it means already the interest is for the 5.6. So we must deduct it. So you can write these notes in that way for future. When you see prepaid expense, that prepaid must be deducted from consent.
Okay.
So let's say here we have, I'm going to give you an example. We've got interest on loan, or let me call it interest. Sometimes they call them interest expense. I put them together. Or let me just call it interest on loan because I put loan. For time being, we take it out.
Okay.
Will you remember this?
Yes, I will.
Yes. So prepaids must always be deducted. It doesn't matter which expense are you talking about, which income are you talking about. As long as you have got prepaid, you must go and minus on that particular expense or income that you have. So meaning, for example, the amount that to be recorded in the statement of profit and loss, you will say 20,000 minus what? 5,600. You're
Yeah,
gonna
it will
have
be
something like
14,400.
14. So in the statement of profit and loss, you were supposed to record only 14.4 because you had to minus what? 5.6.
Yeah, okay, got it.
Are you with me?
Yes.
So it means this one, if you are recording this interest on loan must decrease, is what I did here. Remember I said you must minus it from it.
Okay.
And my assets are increasing.
Increasing.
So when you put under the journal, which one must you debit and which one must you credit?
We need to
These two.
debit a prepaid expense and credit interest on loan.
Yes, you are correct. So
Okay.
you'll say prepaid expense and then obviously that amount we said is 5.6. Remember, don't forget
Yes.
to show when you're writing your assessments, because they usually give you marks, especially if you are wrong somewhere, you can get more marks. Yes. Interest on loan or interest expense, just like that. That's how you put it in the GJ.
Okay, got it.
So that's how we always minus, because this shows that the interest on. Are you okay so far?
Yes, I am.
No problem. Now let's try another one. Another one, they say interest on fixed deposit has been received for only 6 months. According to you, for how many months were you supposed to receive it? Because they said only 6 months. What do you think was supposed to be received? How many months?
Interest on fixed deposit. I'm guessing it's 12 months.
12 months. So meaning instead of receiving 12 months, we received only 6 months. Meaning the 6 months. In other words, for example, if I come here, it means, for example, we only had it for the 6 months. We did not have it for the other 6 months.
Okay, yeah.
So we call that outstanding. We've got 6 months outstanding. Sometimes we call them in arrears. Sometimes we call them due. Did you get that?
Okay. Yes.
The account that we use for on fixed deposit.
Okay.
But this interest on fixed deposit is due. Are you with me?
Yes.
Let me try. So what account do we use for incomes which are due, incomes which are in arrears, incomes which are outstanding, incomes which are unrecorded? There's a term that we use before I show you. Do you know that?
It is accrued income
Can I help?
or income receivable. Am I right? Okay. Okay.
So there are accrued income. It means we had 6 months here. We are lacking another 6 months. So meaning we must add another 6 months.
Okay, got it.
Because we can't close the books with less than 6 months, even though we still have to receive. So meaning accrued will increase the account in question. In other words, this account will go up because it's only for 6 months. We must add another 6 months.
Okay.
And accrued, if I may ask, accrued, how can you classify accrued according to the groups of accounts? Is it an income, expense, liability? What do you think accrued is?
It's an income.
It's an asset.
It's an
So meaning
asset.
even my assets are
Going up.
You are correct. It's an asset. Yes.
Okay.
So if I had an interest on fixed deposit, remember here we're assuming if they gave us separately interest on fixed deposit of 7,000,
Mm-hmm.
How will I deal with that amount of accrued? Do we know even
Well,
how much is that accrued? They didn't. They just told us that it's for 6 months, meaning we must just go and calculate. Let's go and calculate. There's a fixed deposit up there. We just take this fixed deposit
yes,
there. We multiply it by how many months?
by 6 months.
12% first, ne? It's gonna be what?
Yes, yeah.
60. Yes, and then times 12%.
Times 6/12.
Times 6 months. 6/12.
9,600.
9,600. This is the accrued that I'm talking about. Is the accrued
Yes.
income. Are you with me?
Yes.
So will we come, if we had a balance like this, remember we're assuming figures here, will we add or less that 9.6?
We would add it
We will
because
add it.
isn't it
So
going
write it
up?
down as the future notes. Accrued incomes are always,
Okay.
accrued incomes are always added.
Okay.
Can you see now? So we're supposed to add.
Got it.
Prepaid, we deduct. Accrued, we
Prepaid.
add.
Add. Okay.
Prepaid, we less.
Yes, got it.
Accrued, we add.
Got it.
So if I want to generalize these two accounts, which account must I debit and which account must I credit?
I'm gonna go ahead and say that you would debit the accrued income because it's an asset.
Yes.
And interest on fixed
So
deposit
meaning
is an
outstanding.
income.
Perfect. Perfect. I like that. Are you following so far?
Yes.
Yes. You see? Just like that. So we're just saying for in case if they ask you, at least you will know what to do. Can you see?
Yeah, I got it.
No problem. That was number 3. Can we try number 4?
Yes.
They say August 22, which is our month, which is the last month, this one. They say the salary of an employee is still to be paid. Still to be paid. This means it's like the other one that we did for the incomes, meaning it is outstanding, it is in areas, it is due.
Okay.
So what do you think will be the account for that?
I would say accrued expenses.
You
and
are
maybe
correct.
wages.
So you're going to have, just be specific and say salaries. It's okay.
Salaries,
because they say
okay.
salaries. But if I was the marker, I won't penalize if you say wages, okay? But some
Okay.
markers can be very strict and say, where do you see wages here? Can you see now? So, and the other
Okay.
one, accrued expense. Yes. So, the same effect as accrued income, but unfortunately, accrued expenses fall under which group, if I may ask? Where do they fall? Are they expenses?
Current
Are they
liability.
what are they?
Current liability.
I like that. Yes, meaning they increase under which side?
They increase
Debit or credit?
under the credit side.
Perfect. Can you see now? So you put credit there. So it will help you by the time when you go and record. Already you know which account to go and debit and which account to go and credit. So which account must I debit there?
You need to debit salaries
Which one must I credit?
and
so obviously
credit to the expense.
Yes. Thank you so much. And then obviously here, do we have that accrued? Yes, I think we're given is what? 7,000, okay?
7,000.
We just say 7,000. Perfect. And here we have 7,000.
Yes.
You with me? Perfect.
Yes.
No. So remember, you and I were talking about what if. What if we had salary there? Let's say, let me estimate the figure again. Let's say the salary was 8,000. How will I affect it? 8,000. Let's say the balance was 8,000. How will I affect it? Will I add or less?
I think you would less 7,000. Oh wait, no, you would add 7,000 because we still need to pay
7,000.
them.
You will add. I like that. So you will
Yes, yeah.
add 7,000 because remember, everything accrued, you add.
Yes.
Can you see now? Everything accrued, doesn't matter which account are you talking about. So you're gonna add, and that is the amount that you're gonna put in the profit and loss.
Loss. Okay.
Yes.
Got it.
Are you okay?
Yes.
Perfect. I'm happy with the progress. Yes. Now, number 5. They said a tenant has been renting a part of the building since June 2022. It's better sometimes to write it down. In other words, they say 1st June 2022, meaning obviously it's going to be here, somewhere here.
Yes, yeah.
You can quickly, let's say we're writing exam, you can just write, let's say it was here, you say, let me draw another line, let's say it's here, you say 1st June for your control. Can you see now? So that things cannot confuse you. So this is where you started renting it out per month. They say the rent has been paid 1 month in advance. So obviously this one is easy because we know how much is 1 month. 1 month is how much?
What do you mean 1 month?
26,000.
26,000, yes.
Because they did say the tenant paid once.
I
So
got
you want
it.
to know how much was paid in advance is only for 1 month. How much is the figure for 1 month? It's 26,000.
26,000.
Yes. So here
Okay.
we don't have to worry about calculations because it's only 1 month. Unless if they said 5 months, I was supposed to say 26 times 5. Do you understand with me?
Got it. Yes.
Fine. What do you think will be the two accounts for this?
I think it will be income received and rent.
Income, finish it. Income received
And rent. Income. I think you
in
income
advance.
in advance. Okay, got it.
Yes. Or
And then rent
already
income.
prepaid income is up to you. Rent
Okay.
income. Yes. Can you see now?
Yes.
So how can you classify income received in advance? What is it?
It is a current liability.
It's a current liability. Debit or credit?
It would be a credit.
It will be a credit. Perfect. So already we know which one to credit and which one to debit.
Okay.
So which one must I debit? Which one must I credit when I come here?
You debit rent income and credit income received in advance.
You are on fire. Thank you so much. And then it's going to be 26,000. And then remember the other term for, if you don't want to say income received in advance, you can call it prepaid income. Ne? It's allowed.
Okay.
Yes.
And this would go into the statement. I'm trying to think. It will go into the statement of profit and loss.
You're talking about the rent income.
Yes, yeah.
So if the rent income was 4,000, let me not say 4,000. Let's say it was 100,000. Will I add or less accrued? Will I add or less 26,000?
You would add.
No, you can't. Can you see? Because rent is going down. Check here. If you debit rent, rent is an income, it's going down.
Okay.
And remember, this is the same as prepaid. Ne? Just write
Yes.
slash prepaid for the future. I think if you can write prepaid, it will guide you. Prepaid, remember I said whenever you find prepaid, what do? You deduct.
We
So you
minus.
were supposed to minus here,
Okay,
26,000.
got it.
Yes, because it's a prepaid.
Okay.
Yes. We add accrueds, we less prepaids.
Okay, got it.
Yes. That was number 5.
Mm-hmm.
Number 6 is all about depreciation. And I don't like this one because they did give us depreciation. But
Okay.
I trust you know how to calculate using the method. Don't worry, we'll take some questions in the future. So what are the
Okay.
accounts involved for number 6, if I may ask?
Depreciation for the years. I don't know this one.
No pressure, no pressure. Okay, let me write it down so that you don't forget in future. Firstly, obviously, the first account is going to be depreciation.
Okay.
Okay, that's the first
Yes.
account. So first account will be depreciation. And obviously, you are depreciating what? 2 assets. It means each and every year you depreciate this asset. That's how we deal with the depreciation. So if you buy an asset and you're going to have it for 10 years and that asset is depreciable, you will need to depreciate it for how many years? For 10 years. Each and every year for 10 years. Are you with me?
Got it. Yes.
Yes. So if you've got year 1 and year 2, so when you put them together, we call them accumulated depreciation. So it means the other accounts will be accumulated
Depreciation.
depreciation, but you must be very specific. The first one is what? Is for what? Is for the furniture and fittings.
Yes.
Just write some. Just say furniture and fittings. Because if you don't write this, they will give you half mark. You must always be specific. Okay. Yeah. And the other one will be accumulated
Vehicle.
depreciation. Yes. Are you with me?
Yes.
Every time because most students, when they make a mistake, can you see what they do? They say the other 2 accounts are furniture and vehicle. No, they're not. Because there's a difference between vehicle and accumulated depreciation vehicle. They're 2 different things. Don't say vehicle only. You won't get the marks for that.
Okay.
So depreciation is an expense.
Yes.
But accumulated depreciation is, I know it's very rare to see this, negative asset.
The negative asset.
Yes. So already it will guide you when it comes to the rules, because the minute you say negative asset, it means the rules are opposite to the asset. Okay?
Yes. So it will be a credit.
Yeah. You are on fire already. Credit. Meaning this one is credit. Obviously, the other one on top, there will be
debit.
Perfect. Can you see that? Just like that.
Yes. Okay.
So if I go and record there, obviously, let me just lengthen this a bit. So which account to debit? Remember, you always start with the account debited. Which account must I debit?
Yes. We'll debit
obvious.
the depreciation.
Depreciation. And obviously, I will credit the other one.
Credit the other one.
Come here. No. Let me do this. I'm trying to. Let me see if I can copy it. Let's see. No, it doesn't. I'm just going to accumulate it. And I'm just going to say finish. I think you understand when I do this. I'm just trying to save time. Finish and
Yes,
finish.
yeah.
Okay. And the
Okay.
other one. Are you still there?
Yes.
Accumulated depreciation. That one is going to be vehicle. Okay. And then we just have to take the amount as they are there. 37984. 37984. That's the first one on the credit side. 37984, and the other one is 57,600.
57,600.
And we add them together, né?
Yes.
57,600, and the total for them together will give us the depreciation.
Yes, that will be 95,584.
Perfect. Thank you so much for that. Can you see now? So that's how we do them.
Okay, got it.
Can you see now? And then the fact that this is an expense, we said this is an expense, remember? It means expenses go to which statement? Is going to be part of what? Profit and
It's profit and loss.
loss. Yes. So meaning in the profit and loss, we only transfer incomes and expenses.
Yes.
Are you with me?
Yeah.
But in the statement of financial position, we transfer assets,
Assets and
owners'
liabilities.
equities, and liabilities.
Liabilities. Okay,
Yes.
got it.
Perfect. Yes. So I'm just saying, at least this is how you can approach the general journal. It's very rare for them to ask, but you'll never know. It's still part of the syllabus. So again, after doing this, you'll easily be able to what? To go and compile what? The financial statements.
The financial
Are you
statements.
with me?
Okay.
So, but
Yes.
here they did not want you to calculate the profit and loss. They wanted you to adjust this 365 with this information here.
Okay, got it.
Can you see now? You must know whether you're supposed to add or let this.
Okay, I understand.
You understand that one? So at the end of the day, it's all about understanding the adjustments.
I got it. Okay.
But because we're still here, I just want to check your understanding. Obviously, we said, remember I did write something here, I said profit here. Who is it? Here. I said with the stationery, that one, 3,000, we had to add because before they recorded that stationery, they should have deducted this. You understand what I mean?
Yes.
That's why we added here. I want you to understand why you add. It's because they were supposed to minus something from the stationery before they deducted stationery from the incomes. So it means the amount of stationery that has been deducted is higher. So you must add something back so that it can be less. I don't know if it makes sense. So, because someone can say, how can you add expense? Because this is someone can say, can you add expense? It's because already they deducted it here under the profit. So we're just trying to reverse. I don't know if it makes sense or not.
Yes, it does.
So this kind of exercise is very tricky.
Okay. So like in a test, can they wouldn't give us like all the statements required. They'd give us like specific ones.
Yeah, they give you specific ones. Like this was a test, né? So because of time, remember test is only 1 hour. That's why they had to meet us halfway. They did profit and loss to a certain point so that we can just finish it. They only wanted the statement of financial position for this one.
Okay, got it.
Are you with me?
Yes.
They only wanted this.
Okay.
This one. Can you see now? This one. So what they wanted here, we're supposed to start here. Is what you call, remember, this one.
Property.
I don't know if
Okay,
you've seen
got
it
it.
before.
Yes.
We normally call it PPE.
Okay. Yes. Yeah.
Are you with me?
Yep.
But we were supposed to do this first and have a profit, because the profit is going to affect us under equity. But for now, the only thing that we can do is to deal with this part of the assets. Are you with me?
Yes. Okay.
Yes. So property, plant, and equipment, they're referring to this. They're referring to the land and building. Can you see this one? Land and building here. They're referring to the motor vehicle. They're referring to the what? Furniture and fittings.
Okay.
Are you with me?